Do you have some amount of money which you want to invest in the stock market? Simply put, do you have some money that you want to utilize for you to be able to buy shares of whichever companies out there? Before you jump and buy in those shares, I want to share with you 7 tips which you can utilize for you to be able to invest in an appropriate way. Because the most important thing is investing through the appropriate approach or technique, instead of just jumping and then buying random shares which could even end up depreciating in price, making you lose your investment capital. In case you are new here, my name is Afagza Sifuna. I am a finance expert and qualified accountant, bringing you amazing videos about investing and making money each and every day. In case those are kind of topics which you like, down there is a button called subscribe. Click the button to subscribe to my channel so that you don't miss amazing videos which I upload each and every day. And I'll still add it, drop a like on this video. And by the way, some of you reached out asking if I can provide one-on-one mentorship or coaching when it comes to matters investing in the stock market and other areas of finance. Yes, I can. Down there, I've attached my WhatsApp number. Reach out to me. Let's have a conversation. I understand your investment goal, and then I'll be able to structure custom support for you. And as always, I've also attached a link to additional resources which you can go out there and purchase for you to be able to level up when it comes to investing. I've pinned a comment in the comment section down below, so go and check those ebooks. Having said that, the very first thing which you need to be cognizant of as you want to invest is that don't invest all your cash at once. And I'm saying so because when most people out there are starting to invest, they might be extremely excited. They jump at buying random stocks all at once. It is important for you to note that in the stock market, you need to have a sense of where opportunities are. That is why you shouldn't just jump at buying random stocks all at once. Case in point, if you have maybe a million Kenya shillings, okay, why not be patient and then stagger your investment? You can even say, for example, each and every week, you are investing 250,000 Kenya shillings. After doing some basics for you to be confident that the stocks you are investing in are probably decent stocks. So don't just jump and wake up and decide you are pushing 1 million in the stock market in one day. Think about investing bit by bit, whereby you have a sense of opportunities and then you capitalize on the opportunities, as opposed to pushing all your money at once. And then the second thing which you need to be cognizant of is know what you are buying. As I always say, the stock market gives us sticker symbols, okay? But then again, behind those sticker symbols is specific businesses. That is why it is important for you to know what you are buying. That is the very basic of ways you can be able to build confidence in what you are doing. Case in point, if you just see a name of a given stock in the stock market, you push your money there. You even don't know what the business is. You even don't know if they are making a profit. You don't know what they are doing, what the recent changes have been, and so forth. You're most likely going to be gambling. That is why it is important to understand what you're buying beyond the ticker symbol. Understand the business, right? And that way, you'll be able to invest into something which even aligns with your investment thesis, which aligns with your ethics, and you gotta be confident about it. Case in point, if, for example, based on your culture, or even, for example, based on maybe your upbringing or even your ethics, you don't maybe even condone things like, for example, even cigarettes, and you name it. You jumping up and buying stocks of BAT without understanding that is actually going to violate your ethics or even your investment thesis. That is why investing some time to understand the business is very important. And then the third thing which also need to be cognizant of is that at all times you need to check the price, not just the company. Simply put, I'm talking about valuation, right? In the stock market, opportunities do surface in different ways. Beyond just you liking a given stock, you typically want to enter a given position based on the price. Simply put, is the stock overvalued or undervalued? Case in point, if a stock is undervalued and then all the other fundamentals are positive related to that particular stock, it could be a good buy. Simply put, the market hasn't allocated a premium yet on that particular stock. Probably that is a good stock to invest in. In the same breath, in case you do some quick mathematics and then you realize the stock is overvalued, right? Simply put, the market has already allocated very crazy premium on the price of the stock, and you analyzing the fundamentals, maybe you realize the fundamentals are not extremely exciting, then you might be cautious because it might mean that a particular stock is already reflecting all the possible good news, even as the market is allocating a premium on that particular stock, and therefore the probability of the price rising in future is not that extremely high. Therefore, you might want to think if it is a good stock or not before you commit to it. But the most important thing is you knowing really what the price tells you. And that is why, even guys, one of the books which I wrote for you is a book titled Stock Valuation Made Simple. The link is in the comment section down below. Go and check it out because it's going to really assist you know how to go about doing valuation of whichever stock out there. And then the fourth thing which you need to be looking out for is you need to look at recent financial performance. And with this, I'm speaking about financial performance comprehensively, right? Right from you examining the income statement or the statement of profit and loss of a given company, you examining the balance sheet or the statement of financial position, and even you examining cash flow statements, looking at the notes of a company's financial report for you to really wrap your head around different things. Is the company healthy when it comes to debt and being able to pay debt? Is the company healthy when it comes to having assets? And even tied to that, things like, for example, return on assets, return on equity. Is the company healthy when it comes to EPS? Is the company paying dividends? How has the trend been? Right? All these nuances around financials are very important because they're going to assist you know if a company is healthy from the lens of having assets to be able to conduct its business, having cash to be able to run its operations, right? And many other indicators. Therefore, invest some little amount of time for you to be able to examine the financials before you jump on any stock. Because you're just looking at the price and then deciding, you might end up putting your money on a bad investment because probably the business is making insane losses. The business is incurring very high legal costs. The business might even be having negative shareholders' equity, and yet you are jumping on that particular business. That is why you spending some time on spending some time to look at financials is going to really assist you big time. And then the fifth thing you need to be looking out for is that you need to check whether the stock is already run up. And this is where I'm talking about you being cognizant of the price and also investors' behavior. Is everybody just running on a particular stock to buy because of the excitement, therefore making the price continue to pump up, and yet in reality, the increase in price or even so the allocation of premium is not anchored on fundamentals? So check whether the stock has already run up, and in case that's the case, it's not a must to jump on that particular stock because you have alternatives. That's something you can look out for before you decide if you want to invest on a given stock or not. And then the sixth thing which you need to do is aim to diversify your purchase. What do I mean? At the end of the day, when you are starting out, there is something called diversification through you building a portfolio. When you spread out your capital, you also thinking about you minimizing risk because yes, there are those stocks which are going maybe to increase at a very high rate in your portfolio. There are some which are going to decline a bit. But then at the end of the day, if you've done your research and you've built an optimal portfolio, chances are your portfolio is going to get a positive return. That is why you need to think about diversification. And diversification comes in different forms. You can diversify in sectors. You can diversify in company sizes, right? You can diversify in type of investment techniques. Is the company utilizing defensive investment, cyclical investment, you name it? There is a myriad of techniques you need to be looking out for as you go about diversifying your investment. And then the seventh and last thing which you need to have in mind, and of course, it needs to anchor everything you are doing, is you need to have a solid reason as to why you are buying or you want to buy stocks. Simply put, what is your investment goal? What is your investment thesis? What are your investment objectives? You can't just wake up and say you are buying stocks because of impulse. You need to have a very clear reason as to why you are buying, because your investment thesis is going to dictate your investment period, okay? It's going to dictate the sectors you are interested in. It's going to dictate even the technique you are going to use to invest, right? So have a reason as to why you are buying or investing in the stock market, and be sure you're going to start investing on a good footing. What do you all think about these 7 pointers? I hope you've got a thing or two which you can inculcate in your journey when it comes to investing in stock markets, for you to be able to start on a good footing, and most importantly, continue investing knowing these 7 tips and utilizing them at all times. Cheers, guys. Look forward to catching up with you in other videos next time. Bye bye, and you all take care.